What's going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital YouTube channel. Today we are going to talk about trading cycles with order blocks and breakers. So what do I mean? I mean that when we are trading, right, price moves in cycles, right? Price moves up and price moves down. Price oscillates from supply to demand and from demand to supply. So we are going to use that and to understand how we can then trade order blocks and breakers in that same scenario. So before we go any further, I'm going to give you a simple explanation of what an order block is and what a breaker is, and in which scenario can we trade order blocks and in which scenario can we trade breakers, as you can see. So here, let me just show you a simple bit of explanation on this. Right, when you are talking about order blocks, you are talking about market structure, right? So when the market is like this, let me just give you a simple explanation. Let's say the market is moving like this, right? So whenever a market breaks a high like this, there is a candle that this buying that happened, which would have taken out this high, started from. So if this is a bullish move like it is right now, you are going to be looking for a bearish, for the last bearish move before this move started, right? So you are going to find that last bearish move around this, what, around this area. So this is what we then term an order block. So if we continue moving like this, you see that we are going to have more order blocks as price is going up, right? So as price is going up here, we're going to have more order blocks, more order blocks, more order blocks, right? But when then price shifts its market structure and starts going down like this, we are going to be having bearish order blocks again, where price breaks a low, and we're going to be looking at the last bullish order block before this bearish move. So these are going to be what are going to be order blocks again that we are going to be what to be seeing as price is going what as price is going down. But now you have to understand that with these order blocks, right, most of the times these order blocks are retested, right, are retested. But then you understand that when price does this, right, when price does this, and especially around the reversal point here, you are going to see that we will be having something that we can term as an order block as price goes here. But we are going to have two scenarios, and the first scenario is where price forms a high, right? And next it breaks this particular high and comes and breaks this particular order block. So we have an order block, price breaks this high, and this was an order block, and price goes through it without respecting it, right? Then the next example is going to be this particular phenomenon where we mark an order block and wait for price to break this high, but price does not break and just comes and breaks this particular order block, right? This is called a breaker, and this is called a mitigation block, where price fails to take out this. So all these we are going to explain them today as breakers, and because we can trade them the same way. So I'm just going to term all of them breakers for the sake of this video and for the sake of the explanation that I want to give you. So we're going to go straight into our charts and try to explain how we understand this. So when price is going down like this, so this is GBP USD and this is on TIOmarkets. If you are looking for a very good broker to trade with on any particular commodity you might think of, from Forex to stocks, you can look no further than TIOmarkets. The links are in the description down below. Get your account today, fund, and start trading with the best. Price has been going down, as you can see here. Price has been going down, but then price takes out this particular high, right? When price takes out this high, we have changed direction, and we have two areas where we are seeing that this is an order block, and the fact that price took price at this particular zone, we had this what, let's say we have this order block at this particular zone, price respected this order block, but when price was going down, it left this order block again, the green candle that you can see here. And if you drag them out like this, you see that when price forms right through it, this becomes a what, a breaker that you can actually trade. If you are not okay with the risk of trading the order blocks at the beginning of the trend like this, you can wait for a breaker like that. And I want you to understand that if an order block is taken out, remember we have two cycles, right? So this is the middle point of what, of this cycle. We have the left side and we have the right side. So what you have to do is to understand that you are not going to confuse order blocks and breakers on this left side and order blocks and breakers on this what, right side. So what you are going to do is, if you have this order block, when it gets broken on the right side like this, this is not a breaker. Do you understand that this is not a breaker? A breaker is going to be the first break of the order block, like in this area where the reversal has happened. So when the reversal happens at this particular zone, this is a breaker. But if it breaks in the middle of the cycle, like what you are seeing on this on this particular chart, this is not to be traded as a breaker, though a lot of you guys trade this as breakers. But I'm just telling you that this is not a breaker. You have been helped by that. So we have what? We have this breaker right here. Why? Because we were looking at this as an order block after breaking of this of this high, and we're looking at price retesting this order block and continuing going higher. But price did not do that. Price just storms past that particular order block that would have reserved for a retest. And what does price do? Breaks it and comes back and retests from the other side. So this is how you trade breakers. You wait for a retest from the other side, as happened in this one, in this area, then you trade it going down. After a breaker, you then start marking your marking your order blocks, as you can see in this one, in this area where we are marking every order block that we see as price is going down. And I want you to see that we are not going to confuse order blocks on this cycle with what is happening on the on the other cycle. Why? Because if we divide this into two, you can see that we have the left side, which is the downtrend, and we have the right side, which is currently happening at this particular zone, and this is the uptrend that is in full view now. So what you are going to do is from this breaker, you are going to be trading order blocks as price goes down, but when you get to the reversal point, like in this case where price fails to continue going down, or fails to retest this order block and continue going down, right, you are going to term this as a breaker. When price breaks like this, the retest is what you are waiting for, and the retest came at this particular zone. And after that, what are you going to do? You are going to mark your order blocks right now going up. So this is a change of institutional order flow. Order flow has been going down here. We have had bearish order flow, and now we are in the territory of bullish order flow, bullish institutional order flow. And right now we are looking for buy opportunities as price is going down. But remember, at this breaker point, you trade, you go to the next one. So I'm going to show you now how you trade these particular ones on the lower time frame. Remember, the breaker and the order block are to be treated the same on the on the higher time frame. But when you go to the lower time frames, you are going to use only the breaker to enter your trades. Why is that? Because you are saying the breaker is what we get at the reversal. You have to understand that when we break this, let me use this example so that you guys understand. When we break this breaker at this particular zone, we are in an uptrend there. But when we go now to the retracement that you see in this area, this is still an uptrend on the H4, but on the M15 this is going to be a to look like a downtrend. Let me show you that on this particular whiteboard so that you can see what I'm talking about. If you are looking at this, you can clearly see that on the H4, this is how it looks like. This is how it looks like on the H4. So in this particular move, in the uptrend on both of the time frames, but when we go in the retracement now, looking like this on the M15, right? This is how the M15 will look in this in this retracement area. Okay, what we are doing here is simple. If we look for order blocks on the M15 like this, we will see something like this. But then price will break this as it gets to the breaker on the H4. So the breaker on the H4 will be here, and price will retest the breaker and start going up. When it starts going up, it will break some breaker on the on the M15 in this area, right, and come back and retest again, because price moves the same way. Doesn't matter which time frame you are looking for. So if this is your breaker on the on the M15, price retest from the upside here, retest your breaker. This is where you are going to get your trade, or to enter your trade and go up. Let me show you this on the chart. This is the breaker. Remember, the breaker and the order block are to be traded the same way on the lower time frames, right? And the lower time frame, we're just going to be looking at the what? At the breaker. So where is the breaker that we're looking for? This is the breaker that we're looking for from the what? From the H4, right? So breaker, price comes back, retests this particular breaker. I want you to see that this retracement that price did here on the what? On the M15 is actually a downtrend that price was going down. So if you are not seeing clearly on the what? On the M15, you can go to the what? You can go to the M5 and try to get a bigger picture of how price will be moving in this particular case, or in this particular chart. So let me just look. Okay, it's here. Let me show you how you are going to enter with breakers on the what? On the lower time frames, right? So price was going down. Let's just mark how price was going down, leaving order blocks here. So we have that order block, we have this order block, we have this order block, and we have this order block, right? When price goes down to retest this yellow zone from the H4, it comes and breaks the what? This breaker that you see here. So what are you doing when price breaks it and comes back to this breaker? Your entry is going to be at that particular point in this yellow breaker here, and your stop loss is going to go below the structure right there. So you're going to enter your what? Your buy positions in this particular zone. Your stop loss goes below, and this is how price is going to move, and you would have taken advantage of this particular move of the H4, but you would have entered on the M5 with little risk, and you are going to maximize your profits on the what? On the H4, because you are going to be using a take profit level from the H4. So this is how you are going to be trading order blocks and breakers on the what? On the M15. That's using the same principle that you get on the what? On the higher time frame, and in this case the H4. Guys, I hope this was helpful, and I will see you in the next video. Cheers.